So there was a solution to this. Now I'm getting into central bank digital currencies. Someone proposed something called Fedcoin. And what Fedcoin was Fedcoin was an idea that we could take Bitcoin, but we could solve the volatility problem by tying it to the US dollar, so 1 for 1. So basically the Fed would start its own Bitcoin, but it would have conversion in and out of regular currency, cash and deposits, into Fedcoin, and these would be exchangeable at a 1-to-1 rate. So essentially, Fedcoin would be a new component of the monetary base. Okay. This would have monetary policy implications. If it did away with cash, we could think about something like negative interest rates, but it would disintermediate banks. Remember before I said when you put your money in the bank, it's no longer a central bank liability, it's a claim on that commercial bank? Well, that's risky. I mean, there's deposit insurance, but there's still risk. You pay for deposit insurance effectively. And so people might want to hold these central bank deposits. That could essentially change the structure of the financial system, and one could give a whole lecture on just that. There's also some financial stability implications, however. If people did move out of banks and into deposits, then we wouldn't have to worry about bank runs. There's no reason to run on the central bank. Well, Fedcoin would have been a consumer-facing central bank digital currency. That's not what people are currently considering. What they're considering instead is an idea of using this technology in wholesale payment systems. That is, the systems that banks use to pay each other. And a couple of years ago, we launched this thing called Project Jasper with the Bank of Canada and Payments Canada, which was to develop a central bank digital currency for making wholesale payments. So the way Jasper works is that people pledge money, the banks pledge money, they send regular money to the Bank of Canada. The Bank of Canada generates CAD coin on a distributed ledger. The banks exchange that CAD coin throughout the day, and then at the end of the day, the payments day, they redeem that money and get their regular settlement account balance money back. That was the idea. Now, this was built on a platform called Ethereum. But when we thought about this was a closed system. We didn't really need this trustless component. And so we didn't really need proof of work. So we were able to move to a new protocol, which is called Corda. And Corda is a distributed computing platform that has smart contract features. And it's developed by R3 and it's open source. And one other thing that we did is we dropped the name CAD coin because this suggested too much of an association with something like Fedcoin, this idea of a consumer-facing central bank digital currency, which we didn't want people to be thinking. So we started using this name DDR. So I'm not going to go into too much, but the idea is that with CAD coin, proof of work was replaced by a two-step validation process. One is that you had to prove validations were true. That is, the person that was spending the money to you had the money they were claiming that they had. So this is done by tracing back the history of those transactions. That's done by the participants on the ledger. And then the other part is making sure the transaction is unique. This is making sure no one's trying to double spend. And this is what proof of work does in the Bitcoin protocol. But when we're dealing with this closed, trusted system of banks, we could throw out proof of work and just have this done by a notary, a special participant in the network, which was in this case the Bank of Canada. And the Bank of Canada could ensure consensus, and we didn't need proof of work. So we implemented this at a recent meeting of the Payments Canada, put on by the Payments Canada for the payments industry in Canada, and demonstrated a system that allowed two ways of making payments. One was atomic, and one included this liquidity savings feature, which allowed you to make transactions by inhaling and exhaling payments. So the idea is that you can put payments through a regular stream, or you can put payments into a queue so that you only have to settle the net amounts. But in order to do this, you have to be able to take money from the participants. So there was this inhale where money would come to the participants, to the Bank of Canada, they run the netting algorithm and send it back. You can see the appraisal of this project that we published with the Bank of Canada. And let me just talk a little bit about what the main conclusions were. So what this was an experiment. It's not going to be a production system. It was designed to see whether or not it could be done, whether or not we could replicate the features of the large value payment system in Canada using distributed ledger technology and using as a settlement device a central bank generated digital currency. It was successful. It's not clear that the bank is going to go ahead and make this anytime soon. There was not a lot of advantages discovered over the conventional payment platform, but the idea is looking forward to the future that maybe this can be used as part of a larger scheme of integrating payments with security settlement, cross-border payments, and other applications. So that's more or less where central bank digital currencies stand. There was a proposal for a consumer-facing central bank digital currency. No banks are currently working on that, except for maybe Sweden, where cash is disappearing, and they're contemplating all sorts of alternatives. But lots of work is going on looking at the use of central bank digital currencies in back office applications to improve the performance of financial market infrastructures.